Hello, everyone, and welcome to our webinar, Harnessing SAP Data for Robust Anti-Corruption Compliance Monitoring. Thank you for joining us. A few housekeeping items before we begin. Please submit your questions in the question sections of the GoToWebinar console. We want to make this session as interactive as possible, so please do submit your questions throughout the discussion. If we don't get a chance to answer your question during the session, we will follow up with you afterward. You will receive a request to fill out a survey immediately following the webinar. Any feedback that you provide or future topics you want us to cover is much appreciated. For any additional questions or inquiries, please email us at info@lextegrity.com. My name is Mikna Rotaru. I lead Lextegrity's analytics and compliance monitoring teams. I am based out of Washington, D.C., currently in Europe, but focus primarily on analytics and scoring across our compliance software suite. And I also lead the development of our continuous monitoring product, which I'll reference probably throughout the presentation. Prior to joining Lextegrity, I spent about 15 years with Forensic Risk Alliance, or FRA, and PwC Pricewaterhouse, focusing primarily on investigations and other types of matters that involve bribery, corruption, compliance monitorships, and other forensic accounting projects. Today, I'm honored to be joined by Rimi Maharaj. Rimi, can you give our listeners a brief background, please, of your experience?
Thank you, Mikna. My name is Rimi Mahajan, and I'm currently as a senior compliance professional at Fresenius Medical Care, where I'm overseeing the continuous transaction monitoring process. Prior to this, I had around 10 years of experience in risk consulting, where the portfolio encompassed multiple audits ranging from Foreign Corrupt Practices Act, Sarbanes-Oxley compliance, etc., where my key domain were managing the post-payments audits that we work on. Before that, I have, from an educational background perspective, I am a postgraduate in business management and graduate in mathematics with an honors. And overall, I have a stint of around 14 years of experience within the analytics as well as the risk compliance domain. So happy to be here.
Thank you, Rimi. With that, I want to dive in for 2-3 minutes just to give a little background on Lextegrity and who we are. We are an enterprise software company focused on risk management and transaction-related risks in the compliance space. So fraud, corruption, conflicts of interest, third-party risk management, that's really the space we typically operate in. What's unique about Lextegrity is that unlike other software companies, we're founded and led by former in-house compliance lawyers and auditors from large global organizations. Our CEO was previously leading the anti-corruption teams at Avon and Pfizer, where he really brought in data analytics after their DOJ SEC deferred prosecution agreement, and that really sparked the idea of starting Lextegrity back in 2017. We typically work across industries. About a third of our customers are in front of regulators for different matters. So we've been selected after 3 separate SEC DOJ monitorships, and we've even been cited recently by the SEC on one of our clients' FCPA resolutions. The other 2/3 of our customers are really companies that are proactively looking for help with analytics and compliance automations when they are trying to avoid getting in front of regulators. So what is compliance monitoring? And I'll go over quickly over the agenda and then start going into compliance monitoring. First, we'll go over really what SAP data is relevant and how that ties in with compliance monitoring and also with the regulatory expectations when it comes to data analytics and monitoring, especially from the DOJ and SEC. Then we'll talk a little bit about how, now that we know about the data, what the flow is and cleaning the data and validating that you have the right data. And then we'll use a few examples and case studies of how SAP data coming from an SAP system can be used for anti-corruption monitoring. So we'll have some of those use cases there. And then we'll leave some time at the end for questions. But like I said, when we started, if you have any questions, feel free to submit those and we'll try to pick them up as we go because we want to make this a bit more interactive. So what is compliance monitoring? Fundamentally, it really is keeping an eye on your transactions and being more proactive than reactive. It's really a mind shift change. So it's a program or a practice that companies commit to understand and control their enterprise risk better. So using spend data and other types of data in risk relevant ways to understand trends, patterns, outliers that really inform their processes, controls, policies, procedures, compliance programs in general. This can be used to train employees or inform audit plans. So why is compliance monitoring important? I won't spend a lot of time on this. There's other presentations that talk about the regulatory expectations, and there's other outside counsel that's more authoritative in this space. So I won't spend too much here, but I do want to touch on really the expectation when it comes to the DOJ and SEC, especially as outlined in the evaluation of corporate compliance programs, when it comes to data analytics and monitoring, because I think that's really the groundwork of what we're trying to do. So when it comes to data analytics and compliance programs, the DOJ really emphasizes the following key considerations when it comes to data analytics. So one is risk assessment, making sure organizations are using data analysis to conduct comprehensive risk assessments. Second is compliance program design. Are the compliance programs really leveraging data analysis to design and implement controls, policies, procedures to address those risks that have been identified previously? And then on the second piece, an area that's important is really monitoring, and this is what we're going to be covering mostly today, is really monitoring compliance programs. So the DOJ guidance emphasizes the importance of ongoing monitoring and having a proactive risk detection. So how is that? How are we doing that? Is really through data-driven monitoring. So companies are expected to utilize different data analytics techniques based on each company's kind of risks to really monitor transactions, identify patterns, anomalies, red flags that may indicate potential compliance violations. And then once those are identified, there is an expectation to continuously improve, respond to detected issues. So one point I want to start with, because it's something that often comes up in discussions, or a lot of our customers and peers talk about, is really where should we start, and what if my data is not good enough? Because data is obviously, you want to have good data in order to do really good monitoring, but at the same time, there is a common misconception that data must be thoroughly clean before initiating any data analytics. So in reality, sometimes that potentially is overblown, and some organizations believe that data cleaning efforts are required. A lot of intensive data cleaning efforts are required prior to analysis. So I really want to talk about how it's possible to start analyzing data and identify what needs to be clean and already start monitoring parts of the data, while improving and putting controls in place where certain data sets need to be improved. So we, for example, have invested a lot of efforts in validating cleaning data as part of onboarding. So companies really get a good value from their data from the first day. So it expedites that process and makes everything go a lot faster. Especially, we'll focus today really on SAP, and because it's a system that's used quite a bit, and we're seeing a lot of our customers, if not most of them, using SAP. So it has a lot of wealth of information that can be harnessed for compliance monitoring. So, and also like the structure of SAP and the reliability makes it a ideal source for compliance monitoring initiatives. So with that, I'll dive into a bit deeper into the data and what data can be used from SAP for monitoring. So primary types of data that are used are really the P2P or spend transactions or payables, but there's also obviously sales transactions or order to cash, as we like to call them, where although it's not as robust as we like, but there are ways to streamline that, and we are, for example, like currently investing quite a bit in that area to make it easier to tackle, because sometimes discounts and pricing are not as easy as payables. So really at first is really there's some questions that need to be asked, and understanding before you get into the data is really what you're trying to analyze and what you're trying to monitor, because you can employ that logic as part of your analysis. So for example, are you planning on looking at intercompany payments? Because if you're not, you might want to start thinking about excluding those. Thinking through what exactly you're trying to do, because that will drive the data sets you're trying to use, and I'll go over that next, but also the fields you might want to use for analysis. You don't want to take more data than you actually need, because when it comes to SAP, there's a lot of transaction, there's a lot of data fields, and that can quickly become quite hard to process. So next, really, you want to break down the business model into how you're going to analyze it. So for example, for P2P, you want to look at, you have purchase requisition, purchase orders, invoices, payments, and approvals, really touching most of these areas. So there's different parts of a transaction that you want to look at, but from the types of data that we typically look at and that we find relevant are kind of go over the big data types. So there's first master data. So that's really the key ones for anti-corruption monitoring are vendor master, that really contains your third-party information when it comes to suppliers, service providers. There is the GL account master, that's very important because it has the organization's chart of accounts and financial reporting structure. And if you're looking at monitoring distributors, resellers, and higher risk third parties when it comes to sales, customer master becomes quite useful. There's also the transactional data is also very important, because that's really where your daily transactions occur and events for the organization. So for anti-corruption monitoring, some of the most relevant are accounting transactions, where the financial transactions, journal entries, invoices, expense reports are being recorded. Payments, of course, where payments are tracked to vendors and other third parties, and POs and PRs, purchase orders and purchase requisitions. Other data types that are relevant and often kind of really augment very well the master and transactions are supplemental data, and these can come from different systems, but can often be found in SAP. So for example, information from a third-party due diligence system or transparency systems when it comes to life sciences, pharma companies. And the last point here is really reference data, and this is touches on really is a framework or a point of reference for other data elements. So when it comes to anti-corruption, especially conditions are important when you're looking at sales data, because that's where you have your pricing and discounts and all of those key conditions associated with the transactions. So with that, I'll quickly go through some of the how you can actually clean the data and kind of process it. And especially when it comes to SAP, there are some good scripts that can be run. So for example, this is a script we use. It's an ABAP script. So it's ABAP stands for Advanced Business Application Programming. It's a programming language that's used by SAP for developing custom applications and automating various tasks. So once you have your script, you can put it on the scheduler, and every day you get those transactions. Because one thing that's very important when it comes to ongoing monitoring is to make sure this, once you think about a process, you want to automate it, because it might not make sense if you have a manual process that will quickly deteriorate, and over time it will really kill efficiency. So it's not really sustainable and scalable if you're putting something manual in place. You want to think through something that's really automated, even though it might take a bit longer, but it's quite effective for having doing these analysis. So by having an ABAP script, some of the benefits are really, again, efficiency. Once you have this script and an ABAPer, as they're called, develops it for your organization, these people already exist within the organization. External vendors have their own types of scripts like we do, so there's different ways to build it or buy it as part of a compliance monitoring program. But it really brings there's scalability when you're thinking, if you have multiple instances, if you have your script, you can use it across multiple instances, so you don't need to do one for every single one. It's accurate, it's consistent, it really uses the same field, so it can be easily auditable, the code can be reviewed, and so on. So this is something that's quite helpful when it comes for monitoring, because it really, all those data sets we were talking at the beginning, this really automates it. And other pieces to reference here when it comes to processing data is, once you have the data, there's some activities that are very important because they help you clean that data. I know that's kind of where we started with those problems that customers often face, is really how do you clean it, and how do you get it in a shape that gives you better context. So for example, reference mapping or mapping in general, you might have in SAP, for example, let's say 30 payment methods that ultimately they really break down into just a few. So you have like checks, wires, ACHs, manual payments. There's not that many, but you can have 30, 50, depending on the size of organization and scale and jurisdictions, you can have a lot of them. So you want to do those mapping exercises to really define what those payment methods are. Because when you start thinking about analytics, you start thinking about creating rules, you want to create a rule for cash payments. You don't want to start thinking about, oh, now I need to talk to people and understand what the latest cash payments are and what the latest payment methods used for cash are, because then it becomes quite cumbersome and a difficult task. This way, by having this mapping in place, you have a structure and a methodology. So when a new mapping comes in, transactions don't go through the automation, and then you need to map that additional account, because it's normal to have new accounts created, new payment methods, companies continue to evolve, but you want your monitoring to evolve as well. So I touched on this earlier, but really I'll go a bit more into curation and how you can really verify and enrich data. Because this really goes to, once the mapping have been established, you want to enrich the data with relevant attributes. So for intercompany transactions, we were talking defining what's an intercompany transaction. How do you define it? Because sometimes there might be a flag, sometimes there might be a list of intercompanies. So you want to figure those things out that typically aren't as standardized within SAP, because companies can do it differently and there might be different definitions. Free of goods, what is free of goods in your system? Talking to the right business people, understanding what free of goods is, because there could be different interpretation. Is 0 free of goods, or is it $1 free of goods? What is between 0 and 1? Is that free of goods, or it isn't? Because in some countries it might be, in some countries it might not be, because of how different tax regulations and the way the billing system works. So there's a lot of intricacies there, and I think this, what we call data curation, is a big piece, because it helps bring this data to light. And I think on this was on the next slide, but on the next one, and I know I've been doing a lot of talking, and I'll quickly turn it over to Remy and go back and forth. But on the last point of like really validation, just some examples of like how you want to make sure that the transaction data is clean. So there's checks and controls that can be put in place when something doesn't follow the expected pattern. So for example, you have a naming convention or a convention when it comes to dates. In the US, there's a certain convention for dates. In Europe, there's a different one. If somebody doesn't respect it, or it's not the right one, you want to make sure you either convert it correctly or kind of stops and you can address it. Other things that are worth considering is like special characters. That's another problem that sometimes can break things, and there's different ways to treat it. You can take it in, but with like the right text fields, or there's ways to kind of correct that data. Currency is another area where there's quite sensitive and needs to be looked at, where you have certain currencies that, like Japanese yen, where they're reflected in hundreds or thousands, or for other countries. So you want to make sure you have the right denomination there. So again, just a few examples of like how to ensure your data is coming through in the expected ways, making sure like a transaction always has a date and an amount, and all those fields are filled in, because if not, something might not be coming through. And again, like I was talking about earlier, these systems continue to evolve. So you might have somebody, perhaps a new entity being onboarded onto SAP, and something's breaking, or there's a new development happening, or a new migrating from SAP CC to HANA, and there's like some things that aren't coming across as expected. So there's a lot of things, and really validating and having these checks in place make sure that you know when the data has potential red flags, and you can kind of treat it that way and address it. So before we jump into the case studies, I wanted to kind of touch on a bit on the risks, to really talk about various examples of analytics and SAP data that can be used to identify potential compliance risks. These examples are really, they're sourced from the FCPA guide. And on the next slide, you can kind of see it here. So I'll touch on a few of these, but we'll dive in deeper. But these are really risk areas for anti-corruption. They're commonly known, but obviously interactions with government. I want to touch on, for example, on high-risk jurisdictions, and just show really the depth of SAP, because I've learned a lot since I joined Lextegrity. a year and a half ago working with SAP, and how, even though I was using it before, I didn't realize how complex and how data rich it is, and how many different fields could be used for similar things. So when it comes to cross-border transactions and looking at high-risk transactions, there's a lot of places that talk about countries, because obviously you're looking at high-risk jurisdictions, but you want to see there's a place for end recipient partner country. There's a place for ship to partner country. So if you're worried, not just anti-corruption, but maybe more export controls, sanctions related compliance work, those are very important. But also really certain types of leakages where your product, you think you're going to one country, but it's actually going to a different one. So I was talking ship to partner, but there's also like customer item destination country, customer payer country, there's carrier partner country, there's sales personnel partner country, responsible company country. So there's a lot of different country fields that could be relevant. And I promise this is the only one where I'll go into this level of detail, but it's just really to show that there's a lot of really good data. And when you think of this, you want to talk maybe with different people to get all the fields, because if you want to do a right analysis, you want to look at all of them. Like it's looking at just one sometimes only shows you a bit of a picture, and might be applied to one country, but another country might be doing things completely different, and you might be missing it completely. So it's important to kind of keep all of these in mind here.
And like you rightly said, Meghna, based on the recent guidance that we have from the Department of Justice, they keep on stressing for the companies to leverage the data as well as the matrix and the different objective evidence that they have based on these analytics to demonstrate whether the compliance program of any organization is working effectively or efficiently or not. And like we said, once we move and further dive into the used cases, we will be referencing those risk areas or the key points from a compliance program standpoint, and where we can actually leverage the SAP information that we have. So we can move to the used cases from here on. And the first focus area that we had on the next slide is related to the favorite topic of ours, which is the high risk transaction monitoring. And this is actually a key parameter when it comes to continuous monitoring as a compliance program objective, where the idea is not for someone to manually pick out the transactions which might be high risk, but for an automated tool to trigger and identify these transactions based on certain predefined criteria. Given the current domain that we live in, we have AI, we have different automated triggers that can be set up who can analyze the data. And some of the functionalities are available within Lextegrity that make us leverage those analytics from that perspective. The idea is that these automatic triggers should be a referral for all the compliance reviews that are being performed with respect to high-risk countries, subject profiling, expedited payments. One of the examples that we are currently showcasing here is related to the expedited payments, which also caters to two aspects. One is the process adherence, and the other aspect being the suspicious angle of any transaction. So for example, if there is something which is out of the blue suspicious or any anomaly which is detected in the process, that gets picked up through these analytics which are showcased through the Lextegrity's data analytics that we have. If you move to the next slide, we focus on the other domain, which is the red flag analysis. Now, this talks about how we perfectly marry the SAP data analytics, the different data sets that Meghna was explaining a few slides prior, where we are bifurcating what is the master data, what is the transactional data, and then we have a reference sources. So this is a perfect setup in terms of how we can actually correlate with all those data sets, and then at the same time create some criteria of our own. Say, for example, we would want to see if there are any transactions between the same vendor accounts, and you also have a reference bank account in the employee master. Now, this is where you are talking about the master level of data, where we are referring to two master bases, which is the vendor master and the employee master. So where you are drawing some comparisons based on some key fields, say for example, the address, the bank account information of the vendor or the third party in question. And you would really want to understand why are we making certain payments to the employees, whether they are genuinely any employee reimbursements, or there can be another form of payments which are being routed through these kind of accounts from a master's quality perspective. Also, it questions on the data quality of the master that is getting maintained. So for example, if someone tries to mend with the vendor master information within SAP and probably key in their own bank account information instead of any vendor third party, that's exactly what it grabs here in terms of a possible area where you would want to look into why the two vendor as well as the employee share the same bank account information. So that's how you derive the conflict of interest as well from a risk mitigation perspective. If you move to the next slide, we talk about a different segment in terms of analyzing the red flags from an aggregate limit detection perspective, where we configure the analyses to calculate the value or volume of specific transactions over a specific period of time. So in a nutshell, what these red flag analyses do is basically detect the information that is driven from the vendor masters or the master databases, as well as the transactional level information, to pop out if there are any anomalies which are detected, or for that matter, if there are any suspicious transactions which the company would be interested to look in from a compliance perspective. Once we move to the third leg, which talks about the process side. So if you move to the next slide, these analytics that we derive from SAP data also helps the compliance program to assess whether their processes, the business processes which are in action, are currently effective or not. And this is something that also comes in as a process of multiple compliance audit from a SOX compliance perspective or majority of the FCPA compliance perspective to assess whether the business processes, specifically focusing on the key primary processes from P2P, O2C, or R2R are functioning well and have the required amount of controls based on the process design that they have. And this is where we can probably update the analytics. Say, for example, the review that we are looking at on the screen is talking about the chronology aspect, where majority as a best practice, it's usually followed that the purchase orders are supposed to be created prior to the invoice creation. However, if there are any exceptions, that's where it triggers whether we would want to look at the transaction where the purchase order date is after the invoice date. And similar to this, there are other aspects as well.
Oh,
no,
sorry.
Go ahead.
No, and this is a good one also to kind of highlight on this analytic and really this example here, how really to think about analytics when as they're being built. Because one thing we're seeing is sometimes you start with one like simple analytic, but then quickly you realize you need to create another 10. So for example, in this case, for chronology review, you might need to have, like, I think we have probably 15 or 20 different keys that you can pick from. And that's when you create 20 analytics that you're really looking at the same risk, but tackling it from different angles, you might be creating a lot of noise and false positives. So often it's worth combining or thinking through from the beginning really what the end goal is, what's the risk indicator you're trying to address, in order not to create too much noise in the process, because then the output might be messy and very hard to really get through, because that's always something that's worth thinking about and finding the right balance, because we've never heard the compliance team saying they have enough resources and enough people. So there's always that pressure there. So you want to think through, like, how can you find the highest risk transactions and really aggregate things. So this is an example where you want to, if you have a transaction that has the pre-approval has something out of order, the PO has something out of order, the PO, there's something out of order, then that one becomes quickly a lot more higher risk than another one that maybe only has one date off from the other. So there was like something with the PO, or so that's really the mindset, and something we're kind of trying to put into play as we build new analytics, because it becomes a lot more scalable, and you can quickly, like Remy was saying, if some key is no longer working, you can take it out, your analytics still working. And if there's some other one that comes into play because of a new policy, a new control, there's a new policy that goes into place and says this needs to be within 30 days. So then you kind of add a key there and put the limitation for 30 days, because then you know that's what you're trying to control. So there's just different things to keep in mind here as you're looking at these analytics.
And at the same time, while we are looking at the screen as well, there would be certain segments from a pre-approval approval perspective that you can see here as well in an example. Say, for example, an invoice is received before the pre-approval, and that touches the process side as well as the control aspect. And we have another example in the subsequent slide where we are talking about the control effectiveness side as well. There is one thing where you are assessing that the process that you have designed is appropriate or not. And then at the same time, there would be chances that you would still identify certain risk areas from the process as well. That's where we go into the deep in terms of defining certain controls as well. This is the segment where we also assess that the controls are effective or not. So for example, we would be looking at certain parameters which evaluate whether the intended controls actions are being taken place or not. Say for example, pre-approvals is a classic example. You would identify there would be certain transactions being booked into certain GL accounts, say for example, and these are the GL accounts that you've already identified as high risk from your perspective, from your company's business perspective. If there are transactions being routed through these GL accounts, it is a mandate or a control objective that you've defined that it should be having a pre-approval before processing the payment or before having that transaction in place. And this is one checkpoint that also establishes whether the control is working fine or not, and also creates an evidence in terms of an audit trail. While you're shortlisting it for the auditors as well, it creates an audit trail that there are certain samples that you have tested yourself to confirm that the organization's internal controls that are in place are effective or not.
Yeah, and another thing I want to really call out on this one is, and really how we kind of build a context text, but it's also when you want to look at analytics, you want to make sure they're not only exception based and say, oh, there's a high risk flag. You want to think about putting it into perspective, and either through a dashboard or through context text. Like here, you can see the last paragraphs where we pull in, like we're saying, during the last 60 days, there were 25 transactions for this GL account. So then you kind of get a sense, because users and or whoever wants to use it, you get a sense of what's going on through that account without going somewhere else, and you already have a bit more information. Is this really a exception, or is this something more recurring? And maybe, okay, we put this as a high risk GL account, but maybe because it's being used so often, maybe it's not that high risk, or it really is, but we need to maybe put a dollar limit, or maybe we want to create an additional rule to target transactions that are higher risk, similar to one of the analysis that Remy was talking about earlier, where you talk about limits and aggregating limits. If you can add a GL account to that one, like you want to say, okay, it's lobbying, but I care about lobbying over 50,000 and in these 5 markets, because that's where we're currently going bidding process, or there's a regulatory change that's ongoing. So you can target things very discreetly, and this type of monitoring becomes quite powerful when you have the structure in place.
Yeah, that's exactly what really empowers the compliance team members as well, compliance organizations within the wider group, in terms of presenting. There are so many things that you can play around with when it comes to analytics. There are so many permutations and combinations that can be put in place with the data which is available, which initially used to be driven mostly manually. Now, this is the segment where we have to transition between manual to automated world, where, like you mentioned, Meghna, there is no compliance organization that even I'm aware of who is completely would say that we are hands-on with the resources that we have. That's exactly the point, and it really is astounding in terms of looking at what all capabilities are available, where we can derive so much of value in terms of looking, and it also helps the business with the decisions that they are making. Say, for example, the export controls that you were referring from a cross-border transaction perspective. That's something that not many people think from a sanctions country perspective. Probably this is something which is a recent sanction countries. Given the geopolitical scenario, you can make those amendments very hands-on in the current tool that we have. So that's again something which is a very good value add in terms of compliance-driven provisions.
Yeah, and we've seen customers use it even to handle difficult third parties or markets that they previously maybe would have said no to. Like they're now able to, if say for a certain market, there's only one third party available for a certain service, due diligence comes out with a lot of potential red flags there. Nothing, let's say that's complete, like too problematic, but there's something there, and you're worried what services they might be rendering for your business. So some customers like put those third party for monitoring, for subject monitoring, and as a mitigation really. And the next day when the first transaction comes in, the compliance team sees it and they're aware. So it's a very good way to kind of keep control over those transactions. And I think this is actually a good one because we've gotten quite a few questions, and I think there's one that I think this type of analytics could be helpful. So the question is, when using a sales representative agent, it is of course easy to track payments to the agent through the disbursement ledger. However, is there a way in SAP to actually tie that payment and use of the agent back to the actual sales records? In other words, this actually, I picked a different, I pulled a different, I got selected to a different, there was another one on sales agent. So I'll finish this one. Use of the agent back to the actual sales record. In other words, at the time of the contract award, can the agent used for that award be identified in the system along with the commission liability? This one's actually one where I need to think about it for a bit.
So if I'm not wrong, how we focus on the customer and the O2C driven analytics when it comes to agents and distributors, being selected as one of the high risk third parties that we are dealing with. That's one aspect that we can look into. However, as far as I'm aware, not really tying it back to the commission liability. What you can do is tie it back to the payment or the actual amount being disbursed, but then the manual review will again take place in terms of looking back at the documentation to make sure that the commission liability is in order or not.
Yeah, and here I think this is it's a great question, and I might need to ask more questions to really answer it properly. But I think this also ties into what data you're monitoring and how you're treating those relationships. So commissions can take different shapes and depending on the contract. So you might be paying commission as an expense, like your reseller agent might be invoicing you for the commission, so it goes out as an expense. So then you want to look at the P2P vendor process and see what the documentation is there. But sometimes it might be the commission might be taken out of your sales price. So it's actually more looks in your system as a discount or a reduction or potentially a credit note to the sale. So it can take different shapes of the way it's accounted. So it's important to kind of look at all of them, especially we've seen it done in multiple ways depending on the country and the business. There are some good analytics that are simple, but they're helping identify these relationships to make sure to make compliance professionals aware that they exist. So, for example, similar to the conflicts of interest analysis that Remy was talking about earlier between employee and vendor, you could have conflicts of interest between customers and vendors. So where you're looking, okay, this is a customer, but they're also a vendor. Is this expected? Is this one of the relationships you're asking about where they're, as part of that contract award, they're also getting paid commission, and then there's also a discount going in, and if that's kind of in line with the contract. So that was one of the questions we got. I'll see, there's another one that I was trying to get to. So what if you have a distributor in one country that you sell and ship to? The distributor has authority to distribute your products in other countries that are not recorded in your SAP instances. Any thoughts on how this can be managed via SAP? So I think obviously this is, as long if it's not in SAP and you're not shipping to, you're shipping just to the distributor, I think this becomes quite difficult. I don't know, Remy, if you have any thoughts on how to manage this.
So the primary aspect being that the data has to be available, like for example, the information in terms of the sell to and the ship to, if not coming from SAP, probably something from a reference data perspective. If we have that information, then again, we can derive it through the analytics that we're talking about. However, if it's not on SAP or any other reference information, say for example, any other ERP that they're managing for this kind of information, then it might get a little difficult.
Yeah. So some other thoughts here of, like, obviously, if you don't have the data, it's hard to monitor, but because this seems like something that might be very high risk, and this goes back to kind of the risks and the risk assessment, because if you have this third party and you know they're interacting with government, they're selling to the government, you know they're going to bids, tenders, that's, you know, 80% of their products are going there. It's a high risk country, you don't have any visibility over what they're doing. You might want to start doing additional monitoring of this distributor or reseller. Like, you might want to score their transactions higher. You might want to pull a few invoices, see what's on them, see how the prices are. Is there additional discount given? Is this kind of arm's length? Because this is a good example of, I'm not sure what industry person that asked the question is in, but this is how a lot of the technology companies got in trouble. There's cases for Microsoft, Oracle, SAP even got in trouble for this. So a lot of very reputable companies got in trouble for this type of arrangements where their resellers, distributors are allowed to really go ahead and resell the products with little oversight. And the expectation is, when you are giving discounts that are higher than average, you are also doing some additional monitoring, control, asking questions, doing audits, like different types of risk mitigations measures to make sure that discount that you're giving, it's not going to be used to create a slush fund that's going to be used to make inappropriate payments, inappropriate gift giving, and all the things we know that are a problem from an anti-corruption perspective. So that's kind of how I would look at these. If with some of the data sets you you know the data is not there and there's not a way to get it, that's when you, if you're asking the question, you know it's potentially problematic, you need to find ways around it. Maybe going in and auditing them. Maybe if it's a big country, and we've seen that more and more now, where big companies, multinational companies, are making that distributor make sure they have a policy in place, make sure they're conducting their own assessment, and then sharing the audit report for like anti-corruption with the multinational companies, making sure perhaps they're doing some monitoring of their analytics and saying, hey, you need to do at least these 2-3 things because you have a lot of high risk transactions. So I think there's a lot of ways, and I've been recently to quite a few conferences, and I think from the government's perspective, there is no expectation that there's like one size fits all. It's really what the risks are, and is what you're doing something that makes sense for that risk based on what you know at that time, and making sure that is documented. So when a year later something happens, if hopefully it doesn't, but if it happens, you at least have a good defense to say, this is what my reasoning was at that point, those were my risk assessment, and this is why we did things this way. Obviously, in hindsight, things can change, but we all know like these things evolve quite a bit. So no, that was a great question. And so other questions, this is more of a technical one, but happy to take it and talk more after. Can we use other programming languages to interact with SAP like Python? How efficient and effective comparing to SAP scripts? So when I was talking about the SAP scripts and like the ABAP script, it's really to get the data out of SAP in a format that's easily usable by programs like Python, because we use Python as well, and other programming languages. So it's not that you're going to build your compliance monitoring within SAP. It's really taking the data in a way that's structured and clean and scalable to another system. And touch and examples like, because your SAP, like it evolves, like you're going to get another country, another instance. You might get, for example, another field. Like there's, when you build these kind of ABAP extractors from SAP, or you simply take data dumps, you want to think about how you put some placeholders for custom fields, because at some point somebody might create an additional field. They might be creating some additional field to take data from somewhere else or to bring in new data. So you want to have the backbone in place to be able to quickly tweak your extract and then automatically kind of process through your other programs like Python and other scripts. So so it's definitely those are the way to go when it comes. Those are the programming languages to go when it comes to analytics. It's really just the SAP piece is really just to get the data out in a nice format, because I didn't want to. I've looked at the attendees beforehand, and I think a lot are more in-house counsel, auditors, not necessarily data folks. So I didn't want to go into too much of the data piece. But as we were talking about like master vendor or some of these fields, it's not like it's one table. There's multiple tables within SAP. The bank information might be somewhere, some of the addresses, some other information just for a vendor. So when you're pulling that master vendor list, you're actually going into different data sets. And it's not as easy as you might think, because sometimes there might be a unique key that links to all of them. Sometimes there might not be, and you need to kind of create your own and like some other logic. So that's where it becomes a little more tricky, and that's why it's so important to have some type of extractor built, so you can afterwards focus on the actual analytics. So Okay, we have quite a few more questions, so we'll try to get, we only have 5 minutes. Would it be possible to implement a red flagging mechanism onto data from various SAP systems and/or different languages? For example, Korean, Japanese versus English. Yeah, I mean, we've always kind of worked with companies that have, and sometimes like over 100 countries, like operations over 100 countries. The key here, I think, is really to think about how you want to map data, and it goes back to mapping data at first, but so you want to standardize things like GL accounts. You want to think about how you group GL accounts, and if it's a local account that's really for entertainment, you want to classify it as entertainment. If some other country calls it entertainment other, it's still entertainment. If some other country calls it entertainment with customers, it's still entertainment, or you might want to break that to a different account if you really want to have that granularity. But if it's all entertainment and it's 200 accounts that talk about entertainment, you might just want to map it. So that mapping helps with some of that. And then when it comes to the analytics, I think another piece is, like we were saying, to have the right structure so you can put keywords. Like the keywords can be from.
I was coming to that. Because
Yeah.
how we use it is usually how we translate those keywords in the local languages and how it actually refers to. And that's one classic way of picking out those high risk keywords in the subject fields. Say, for example, the transactions description, which is available in SAP. Now, the keyword, for example, is called Schwarz. Schwarz in Germany would mean something which is black. However, in some other company, it might also refer to the black money part of black. So that's how we usually talk about the keywords, and we also take into consideration the translated form of the word, which is coming across in different languages. That's a classic example how the different languages can come at play in defining the red flag mechanism that you were referring at. So keyword analytics is one place where we usually use that.
Yeah. Yeah, and that's really, I think, for you want to have that. And again, when if you're doing high risk GL accounts like the one on the screen, like that type of analytic, when you have that drop down to select the GL accounts you're going to use, or the table you're going to select from, you want to have all the GL accounts no matter the country. So it's really thinking about it that way, because then you're not just doing for a certain country, you're connecting to all the systems. And that's another kind of reason why some companies are afraid really to start when they have multiple SAP instances, because they think things are all that different, but often they're not as different, especially when it comes to the master data and transactional data that's usually used for anti-corruption monitoring. Like it's all, because it's all used for accounting, it's all the same data. If there's more there, perfect, that can come in, and you have the structure to bring it, like we said, with like the custom fields and some of the custom rules that can be created. But otherwise, it's still really the basics, and they still bring quite a bit of value. So I think that's thank you everyone for the questions, great questions, and we'll reach out, make sure we've answered them, and if we need more time. But if you've got additional interest in the topic, even if it's just for a quick benchmarking, I think our team will be reaching out or sending out some resources and offering discussions with some of our experts. If you have any additional questions about Lextegrity, or if you would like to schedule demos and or benchmarking, please just email us at info@lextegrity.com. I also encourage you to connect with us on social media and visit our website to learn more. Thank you so much, Remy, for speaking with us today. I really appreciate it. It was a pleasure having you. I think this concludes today's webinar. Thank you so much for attending.
Thank you, everyone. Thanks.